Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's take a look at the gold. On the daily chart, guys, as you can see, market finally has started move down. That is typical action today for all dollar-related assets. So you can take a look at the forex markets. You'll see that all currencies stands in a retracement across the board. In the euro currency, New Zealand dollar, Canadian, and almost all currencies right now stands in the downward action in relation to United States dollar. The gold market is not an exception. Yesterday we have said that since market has reached the daily overbought and has completed intraday ABCD target, that really could be the reason for some retracement down. And also, since it's few that we could do right now on the daily chart yet, we mostly have discussed yesterday the chances for the scalp trade that Judd Napoli framework calls as the Kibi trade. The Kibi trade is the analog of the stretch, but stretch is a combination of the fib level and overbought or oversold condition, while Kibi trade is the combination of the same overbought oversold but accompanied by some ABCD target, but not the fib level. That's the major difference between these trades, and they also have the different targets, should be differently traded. And yesterday we mostly have dedicated the update to this possibility to trade it, but this trade is not suitable for everybody. It demands some skills since it mostly intraday and scalp trade and counter trade action. So not for everybody this trade is suitable because it usually takes and carries more risk for trading. On the 4-hour time frame chart we see that trend has shifted bearish. That's particularly the target that market has completed. So take a look, A, B, C, bottom, 1618 extension, and turn to the downside. The framework how to trade the Kibi trade, it assumes that we should drop to hourly time frame chart. Since we have this set up on the daily, we need to use the trend on the hourly to trade the Kibi trade. So you can see on the 4-hour time frame chart two fib levels, 1190 and 1172. On the hourly chart we said first we need to wait when the market will shift trend to the bearish. That has happened here. After that we should wait for minimum fib retracement. What we understand with the fib retracement, the retracement that where market should reach some fib level. Here we not quite 1207 not quite had been reached, but simultaneously market has formed a bearish grabber here. That was very welcome, and theoretically here we need to take the short position with the Kibi trade. The potential target of the Kibi trade, minimum target, is the minimum extension of the ABCD pattern. Okay, so 618 extension should be taken for profit order with the Kibi trade. But if you will, for example, use a bit extended ABCD, you can see that lightning bolt ABCD, since this retracement is very small. Usually it could be more significant because upward action was rather long, and the retracement could be really great. And this, in the most cases, ABCD could take the normal shape, and the BC leg is more significant. But here we have just minor BC leg, just a 3-8, and the stop grabbers have been formed. So if we will apply this kind of the ABCD, then the target stands at 1185. That's very close to, just take a look, 1190 fib support. So in fact that will be some kind of the agreement. The major risk here stands with the, for example, this market could form here another great retracement to get this ABCD pattern. Because stop grabbers already have hit the targets, you can see that these lows have been taken out. Well, in this case, it's better to move stops to the break-even. When the market will start move action and according to the QB trade, it's better to protect your position with the break-even stop loss order. So now we see that this trade stands in progress. We will see what will happen. Maybe the market could reach the target even today when the Ms. Yellen will start its speech on the situation in the economy today, and many investors and the market participants wait for his speech because they would like to get some clarity or more clarification on the current situation. What finally Fed think about the rate hiking, because that's why maybe market will show some acceleration, more volatility closer to the opening on the United States session. So we'll see what will happen. But right now we see that this trade stands in progress, but again, that's why we haven't called you to trade it, and we can't oblige you to trade this setup, because it's a bit risky and not as clear as, say, double repo on the daily chart when we usually trade such sort of the patterns. It's not suitable for everybody, but still it will be interesting to see how this setup will work, and what will really happen with it, because it's short term and probably it should be completed maybe even today. So let's see what will happen on the United States session.